I have 81 very specific PD arrays. Okay, I'm not going to teach all of them to you, but one of them I've made mention in public, and I've taught it in my private mentorship. It's the immediate rebalance. Okay, if you look at how, for instance, look at your NQ chart, NQM2023, hover over top of the Wednesday, May 10th, 2023 candle on NQ, your hourly chart. It should show that it's 2 p.m. if you're set to New York local time, which is how you should have your TradingView chart set, so that way you can follow me. And it's also how the algorithm runs. Everything's booked and priced on New York time. I don't care where you are, who's told you different. It is what it is. Okay, this is it. So that bullish candle, that buy side imbalance, sell side inefficiency, that is a fair value gap. It does not completely get repriced to the low, which is the high of the candle at 1 p.m. on May 10th of 2023, when we drop down on the candle on Thursday, May 11th, 2023. Okay, that 10 a.m. candle, we'd made that low of 13,361.5. It did not completely trade down to the low of the fair value gap, so it left some of that open. That fair value gap is a draw when price is above it, and it seeks discount. If you go back to that candle at Friday, May 12th of 2023 at 10 a.m., that candle opens at 13,445.00. Notice that? If you're hovering over top of it, looking upper left-hand corner, midpoint of your chart, and you'll see the opening price, 13,445.00. Then the high forms at 13,454.75. That repricing, okay, that repricing is doing two things. Two specific things are occurring there. It's repricing back to a low of importance. What low would that be? Hover over top of the 8 a.m. on Friday, May 12th, 2023. Okay, so that low comes in at 13,453.75. Now that 0.75 is like creating the opportunity for a mohawk. Okay, a mohawk is where the price action just goes just a little bit past a very specific level. And when you're trading, we look for very specific things in precision, yes. But there's always going to have to be this gray area, which is what I taught in Forex, where it's usually 3 to 5 pips. Okay, so because there's different brokerage firms and brokers are using different liquidity pools and their own in-house liquidity pools when you're trading Forex, there is no centralized exchange. There's no, everybody has the same price. That creates an opportunity, like in the beginning, when Forex became a thing where it was opened up to the public, it was the wild, wild west. I mean, brokers were getting away with murder, stealing and robbing people, okay? And it's gotten way, way better, but there's still this disadvantage in terms of in-house liquidity versus centralized liquidity, where everybody sees this candle at Friday, May 12th, 2023 at 8 a.m. Every single trader, every living soul that wants to handle the NQ on delivery contract June of 2023, we all agree that that high is the same high price. We can see that. It's there. We can see that. That's an advantage over futures, over Forex, over crypto, over whatever, okay? This has a built-in advantage, and it's much more refined. It's much more mature of a marketplace. But that candle at May 12th, 8 a.m., yesterday, Friday, at on the hourly chart for NQ for NASDAQ, that low comes in at 13,453.75, which is 0.75 or 3/4 of a point or 3 ticks above the low of that gap on the weekly chart that I showed you, which is at 13,453 even. The high of the candle at 10 a.m. comes in at what? 1 point above that low. So it's allowing for what? It's allowing for that low that formed on 8 a.m. on Friday to be booked. No person that would be long aiming for that low as a target for a short entry or a long exit and high frequency trading algorithms would have used that. Just buying that opening price at 10 a.m., an algorithm could go long there and sell at the low on the 8 a.m. candle. That's high frequency trading. They go up and down all day long, firing all day long, boom, 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 boom. And it's reading these inefficiencies in price action. Because of that candle that formed at 9 a.m., the candle between the two I've been referring to for the last few minutes, the 9 a.m. May 12th 1 hour candle, if we would have not made the high on the very next candle at 10 a.m. as high as we did, and it matched the low of the 8 a.m. candle, if that would have fell short of that, when the candle opened at 11 a.m., we would have a fair value gap up there. But because the market did this, it opened and rallied up to the new week open. I'm sorry, I want to keep calling it a new week opening. It rallied back up to the 13,453 low of the weekly gap and repriced to the 8 a.m. candle's low. That makes that an immediate rebalance. Now, an immediate rebalance, this is for your notes, okay? I know you guys like to do other things. Just note that at this minute marker, okay, look at your time on this Twitter space if you're watching it live. Send yourself a text message to this specific time so that we can go and write the notes down. Whenever price offers that to you and it's an immediate rebalance and we've already met an objective, what's the objective? The weekly gap I told you. Were we able to make higher highs after that? No, it just hugged around right above that 13,480.75 level on multiple hours between the 8 p.m. on Thursday all the way to the 9 a.m. For 12 hours, it just stayed around inside that gap, but just wanting no real interest above the high that was formed at 9 p.m. on Thursday, which came in at 13,494.25. So that immediate rebalance is a signature that tells smart money that the algorithm will start spooling price. That means it starts sending it, boom. Where's it going? Down. Where's it going to seek? Inefficiencies. Okay, well, let's put your candle, I'm sorry, put your cursor right on the 10 a.m. candle on NQM2023. That high reprices back to a specific price level, the weekly gap low. We've already filled it. We have balanced it. What does that mean? We went up through it. We passed down through it. And then we went up, tried to test it as going through it one more time. And we failed immediately with a immediate rebalance. So that's the reason why I coined it immediate rebalance. When it rebalances like that, you don't need, the range is too short in time. You only have those three candles. The candle formed at 10 a.m., at 9 a.m., and 8 a.m. And 8 a.m.'s low, it rebooks to and allows the price to be offered 1 point above that. That's allowing for smart money to get short there. It does not, and it will not go back to the high of 13,480.75. And I know when you hear that, it sounds like, oh, he can say that now because it's hindsight. Look at my trades, folks. Look exactly at every single time I place a trade and where I'm placing my stop loss. You don't see that in retail books. You have no idea why I'm doing those stop placements unless you have trained with me. I know that the algorithm won't go back to those levels. And if it does, say I'm wrong, I'm human. Say I'm wrong, I get that wrong. Then I know that I'm going to sit sideways and do nothing for that session or look to reverse. I'll teach you that this year. But there's things that you have to learn incrementally. You can't just say, okay, I'm going to have a conversation with I.C.T. He's going to tell me everything he needs to tell me in a couple videos, boom, boom, boom. And I'm going to know everything I need to know, and I'll never have any questions about this or that. No, you're going to have all kinds of questions. You're going to have a lot of questions when I'm done in November that pertain to you personally, but not how you're going to trade. You're going to have a plethora of ideas that you can go in and find setups, and this is one of them. This is a model that in and of itself can absolutely do everything you need for trading and not have to do anything else. Don't you always say that, I.C.T? Yes, that's what I'm talking about. I have lots of models. I could create a new model every single day, and they would be independent of one another. and they are offered every single week. See, that's the problem with all of you that are coming in here and you're feeling rushed. I need to learn this right now. I got to get funded. I got to do this. I got to do that, blah, blah, blah. No, you got to settle down, man. You just settle down. You have to allow yourself to grow an affinity for one thing that I've taught or will teach. And then once you know what that is, then you pour all your attention and your focus into that. Be a master of one thing. Don't try to be a master of everything. It took me three decades to know what I know, to be able to do what I can do. You're not going to learn it just because I can do it. I'm not going to be able to teach it to you real fast and short. And the 5-minute trainer guys out there on YouTube, they're trying to condense my stuff. They're not going to help you either. They're not. And I get it. They want money. They want clicks. They want, the attention or whatever. But that's not going to help you. You have to find something that resonates with you. In this immediate rebalance, it can be a model, or for me, most of the time, it's just a confirmation that, okay, I'm about ready to see what? Strong down move. I want to see large range candles. I saw a person send a tweet to me. How do you know, I.C.T., when the market's going to have these big sudden rushes and big candles? How do you always do that in the reviews, your videos, or you're reviewing things and you're showing your executions? You type it out and you know exactly when it's going to happen. It's things like this. This signature here. I have about a dozen of these types of specific things I'm looking for that tell me right when speed and magnitude should enter the marketplace and start to take right off. When I'm looking for something, right away it should take off right at that candle or the very next one. That is anticipation. That's not reacting to price. So you need to know what you're looking for. Why should it form? Where will it form? And where is it going? If you placed your cursor on that 10 a.m. candle, you can see that the high went right up to the low of that gap that if you would have never placed it on your chart, it would completely be hidden from you. Notice that. You have the lines on your chart because I told you about it. Everyone outside of our circle has no idea that that thing even exists or that's even worth having any mention of. And they're surprised at how price reacted on that on Thursday and the Friday. They have no idea why it did what it did. And when you start seeing signatures like this immediate rebalance, it repeats. It's indicating that it doesn't want to leave a fair value gap. Why? Because it ain't gonna be wanting to come back to it later on. Not in the immediate future. See, my fair value gap is a deferred repricing. It's a deferment to a later in time. It will come back to that. So that's the reason why I teach you to take scaled profits. When you listen to these goobers out there, they don't do any executions. They don't tell you what they're doing. They don't show you what they're doing. They haven't called anything. They're not doing anything. But they got an armchair opinion about everybody else, not just me, but everybody else out there. Everybody else is a scammer. Everybody else out there is doing this and doing that. But the people that are really doing it, like me, I'm calling out, I'm telling you and teaching and showing people with making real money. This stuff's repeating. It's like clockwork, Swiss precision. And they're going to tell you, partials are stupid. It's dumb. You took this much risk when you put the trade on first, and then you took something off. That makes no sense. Okay, making money doesn't make sense to you then, period, apparently. If you are entering on a fair value gap, okay, if you're entering on a fair value gap, you will be better served as a developing student to take partials when the price is giving it to you. If, okay, here's one of those unicorn moments where you should be writing this stuff down. If you get an immediate rebalance where price does something that would otherwise, in normal instances, this should have created a lower high on the candle at 10 a.m. On your NQM 2023 NASDAQ hourly chart, Friday, May 12th at 10 a.m. New York local time, that high of that candle, and in any other instance, if we didn't trade back to that weekly gap low there, that would have formed a fair value gap at the 9 a.m. hourly candle. Absolutely would have done that. I would have anticipated that. And then I would have anticipated a run right back up into that as long as the low at 10 a.m. on Thursday hadn't been traded through. Because right below that is sell side. Now, from that low all the way up to the high formed at 9 p.m. on Thursday, there is no fair value gap in that price swing. There is no inefficiency. It's back and forth, but still going higher. So what is going to be the draw from that immediate rebalance at 10 a.m. on Friday? The sell side liquidity and what? The open portion of the 2 p.m. Wednesday hourly buy side and balance, sell side inefficient, that big green candle or big candle, up close candle at 2 p.m. on Wednesday, May 10th, 2023. So those are two targets. And best case scenario would be what? Returning back to what? New week opening gap. It's a magnet, folks. That's where fair value exists for the week. The weekly range, the weekly candle has a built-in fair value gap. That is my new week opening gap. That's the reason why I teach it to you the way I teach it. Everybody else that sees that gap, if they watch it or if they see it like that, oh, it filled the gap. They're done. They're done. There's never been a writer. There's never been an author. There's never been an educator. There's never been a trader. There's never been anybody else out there ever that ever talked about this logic but me. And I say these friggin' things because I'm tired of little boys on YouTube crowing about how, yeah, this guy's supposed to have concept and he has this and he has that. Motherfucker, I'm calling this shit like to the tick. You're out there trying to get fucking funded accounts. Can't get fucking payouts. Can't do shit. Stop talking about me, motherfucker. Mind your own fucking business. You can't keep up with me. Okay, I'm being fucking nice to all you motherfuckers. I'm allowing you to have an audience. Immediate rebalance.